That's the beauty of it. So, in other words, 10% net is equal to almost 13% getting from somebody else, and it will be paid out monthly or quarterly, like there. And then 11% will be net 11, and 12% will be net 12. So, actually, if 12 at 30, 40% is like 4%, so it's like 16% you're making, but finally you're taking 12% home. That's something, I just wanted to explain that a little bit. Distressed debt, now that's purchasing troubled loans. I just don't like that. I mean, you could lose all your money and things like that, but it all depends where your risk profile is. But there are so many places where you could invest your money to make money. I call it velocity of money. For accredited investors, it's so important that your money is not sitting in one place, but you are putting them in different streams of income where it's growing conservatively, of course, with finding the right operators and putting it with them. Specialty finance, big one, niche sectors like litigation finance, royal, I don't know, again, that's something. Hedging strategies for uncertain times, option strategy, uh, puts and collars. Some of you who are joining me today, maybe you're really great at it. I'm not good at that at all. And precious metals, I believe in precious metals, and I know gold has just skyrocketed. You all know that. And silver also is very strong, right now as a portfolio insurance. So the key thing I find in talking to my very wealthy investors, I've raised over $200 million. What? My investors have given me, accredited investors and sophisticated investors have given me over $200 million, where I have bought these real estate deals and everything. I have not put their money in these things at all, but mostly real estate, because I like real estate in the sense that you could really invest like 100,000 in it, but if the LTV, loan to value ratio, is like 70/30, you are controlling 3 times or three and a half 350,000 for your 100. So it's like you're growing your money by controlling larger leverage portion. And when the increase happens, the bank or the lender just takes their payment of the loan back, balance of the loan, but they don't take any equity gain from us, from you, from the investors, or from me, general partner, like that. I love that. So the leverage deal is a better deal. Good, good debt is good debt. Bad debt is not good debt, but good debt where it can grow and everything is pretty good. Volatile, VIX and all that, I don't believe in. Leverage tax advantages, again, I mentioned about 1031 charitable. This is a good one, the middle one, by the way. I mean, we bought this hotel, just to give you an example, in Texas for 6 million, and it went to 12 million. Wow. We were able to manage it so rightly and everything, increased occupancy, value add. And then we sold it right there, I think in 2023. And then from 1031, profit we made like 6 million. We were able to take that, convert it into another hotel, and not pay any gains. So that's the one over there, of course. And then alternative and worth considering, all that. And